Hi traders, welcome to this YouTube interview. In this interview, we talk to trader Nick. Nick has been a trader for over 7 years and has a YouTube channel with over 370,000 subscribers. Nick hosts live trading streams daily on his personal channel as well as his business channel, A1 Trading. In the interview, we talk about Nick's personal journey and the best approach for a beginner trader to take to break into being a profitable trader. Enjoy. Hi, Nick. Thanks for joining me today. Would you just tell me a little bit about yourself for everybody that doesn't know who you are?
Sure. Thanks, Jonathan, for having me on. I'm excited to be here. And yeah, I've been my name is Nick. My handle on YouTube and social media is Trader Nick. I've been on social media for I guess 3 or 4 years now, and I've been trading for about 7. I would, in terms of trading style, I would call myself sort of a traditional trend follower. I like trading momentum. I like trading with a mix of fundamentals and technicals in my trading. I've had my YouTube channel, which is has been a lot of fun. I'm at this point getting close to almost like 400,000 subscribers, which has been a really
Wow.
cool journey. And I've had a relationship with Blueberry for pretty much most of that time. We've done several projects together, and it's been all around really good. Like I said, my style mostly trend following, mostly momentum based, and I trade a good mix of currencies, commodities, and a lot of indices trading, the S&P 500, the Dow, things like that.
Okay, cool. So how did you get started in it all? I know you've obviously had your YouTube channel for quite a while. Was you trading before you even started the YouTube channel, or was the YouTube channel sort of a kind of like to help you learn in the beginning?
Yeah, that's a great question. So I started out I like 7 years back before I had any social media presence. My dad was sort of interested in investing in stocks, and I had a couple friends who were also interested in the same thing. At the time, or one of my earlier memories within the stock world was hearing about the Snapchat IPO. So when it first came on the market, it was a very interesting launch, I guess, and that just caught my attention. I was very curious about how that would work and how markets, would price Snapchat. Do they think it's a great company? Do they think it's not a great company? And anyways, it took me down a whole path with stocks. And before that, I had been learning about investing. And so I sort of putzed around, I guess, like most people, just trying to figure out what I liked and what I disliked. And I landed more on being somewhat active, being, instead of just sort of purely passive investing and long term, which, I still to this day do as a component to what I do. But I was always fascinated with the idea of what makes markets rise and fall, and what are the contributing factors, and maybe mostly what really got me interested into ultimately starting YouTube was like studying and building like trading systems,
Mm.
strategies, back testing, learning. You have this theory like, hey, there's a phrase, for example, sell in May and go away, right? Well, like, you could test that concept. You could actually go see, is that actually a strategy that holds up, and is there some sort of some strategy or system you could build around that? And I think that curiosity side of me was really what sparked my interest in markets, because my background is in computer science. I've always been interested in solving puzzles, and trading is the ultimate puzzle, I guess. So that's what entertained my way of thinking, I guess.
Okay, cool. So was your background in computer science, I guess that really helped you with the system side of things. Did you like automate any of those, or was it just you kind of use that background to then kind of just kind of manually do it?
Yeah, so one of the reasons that I even went down the path of currencies was that for software, MetaTrader, in case you're not familiar, or for the audience who's not familiar, has a very user-friendly programming environment. You can build scripts, indicators, automated trading robots and systems like that relatively easily. Of course, there's still a barrier to, if you're not a programmer, it's going to be tricky, but relatively, for programmers, not a very hard environment to start testing ideas in. So what actually attracted me to foreign exchange was not actually currency trading as much as it was how awesome MetaTrader as a platform is for custom writing code. Because like you just said, the way I was thinking and interested in the markets was, solving puzzles, and coding is, of course, the ultimate, you're solving puzzles through code. You're trying to get things to work. So yeah, that actually what attracted me to foreign exchange was actually the MetaTrader platform for coding. And then I was like, well, there's a lot of currencies on here. Let's do some testing there. And, I test all sorts of things, test, indices, commodities, currencies, but MetaTrader has been a really accommodating platform for writing code. So yeah, that's kind of what got me over into currencies specifically, was the software background.
Okay, cool. Is that something that you still do sort of today? Like, do you do? Because I imagine you
Yeah.
probably would have back in the day maybe hit a strategy that started off really well, maybe, or did it end up being the same way? Or did you still have to adapt those?
Sure, that's good questions. Because what I found from spending a lot of time doing the back testing, strategy design, writing code, is that it's very hard to find systems that are like really profitable, right? People, when they come to this space, they think like, oh, profitability means 80% win rate, 2-to-1 risk to reward, and that's going to be their key to riches. And if it was that easy, we'd all be doing it. Everybody would be doing it, but it's not quite that easy. There's a lot of difficulty in finding a system. And what I found through all that studying and testing was you can come up with some systems that are half decent, and those are actually the ones that I like the best. The ones that they perform decently well in a variety of market environments, and overall they have pros, they have cons, but they're something that you can sort of live with. That's where I think most traders, that's where I think that profitability sort of lies, is finding systems that work decently well in a variety of market environments. So yeah.
Okay. So was that the sort of turning point for you to becoming profitable, would you say? Or that was kind of the challenge for you, was to find the system that kind of got you that edge but over all market conditions rather than just one? Or did you kind of map your way into sort of one and just stick to that?
Yeah, that's another good question, because crossing over from being unprofitable to profitable mostly had to do with a lot of back testing. I just had a seminar this past weekend, and we spent a lot of time talking about back testing. And I asked the audience, I asked them, hey, raise your hand if you have ever spent any time back testing. And very few people raised their hand. And I was like, hey, that's an issue, because you wouldn't start a business without a business plan. You wouldn't, try and drive a car if it hadn't been, tested a million times, right? Yeah. Strategies and trading systems are the same way. So for me, that was a major, major component to finding the realities about trading. Is if you don't spend the time testing, you don't know what's realistic and you don't know what's unrealistic. The only way you're ever going to know if a system is, the pros and cons of a system, the expected edge of a system to some variable, some degree, is through a lot of testing that concept, both historically and forward testing it. And I would say another contributing factor was that through that back testing, finding something that was durable in multiple environments was very hard, but it became easier and easier when you learn to reduce the position size to account for drawdowns. And I would say for me, to this day, one of the quickest ways to improve is to reduce your position size. I would say it offers two things. Number one, it helps you big time with drawdowns. That was a major, because 25, 30%, 40% drawdowns are not as far away as you might think if you're risking a larger amount of money per trade. However, with a small size, if you're risking 0.25%, 0.5%, 1%, those smaller numbers are going to keep you further away from significant steep drawdowns. And that's going to make it so that if an environment is not favorable to your system, you may not make money during that period of time, but you'll stomach and survive that period. And then the other thing I think that it does is it acts to help you with the emotional swings, right? Because the other side of it is, even once you have a decent system, can you actually stick through the rules? Because when you're back testing, you can keep back testing, and if your system is good, you'll be out of the drawdown in a matter of minutes. Whereas if you're in real world trading, if you're in a drawdown could last weeks, months, or even a year. So that side of trading is big too. Is purely through experience and years of ups, downs, and good times, bad times kind of thing, is where you can sort of, I guess you have to go through those times in order to be successful. I don't think you can avoid the reality of needing experience through pros, cons, ups, downs, wins, losses.
Yeah, I'd say, what would you say to a beginner then? So I've been in this scenario myself in the past when I first started my trading journey. I'd backtest the strategy. It would meet all the requirements that I wanted it to meet. But then I was very much in a place where I would start trading the strategy. It start off very well, and I'll be like, "Yeah, this is great." And then, like I said, those losses start to hit a little bit, and then emotionally, you just think, is it the right? Do I keep going? I think there's a moment where you go, do I keep going or do I go back to something else? In my experience, I went back and then started to find other things to add to it. And then before I learned to basically, you got to stick with it. Otherwise, you're not going to
Yeah,
let the,
yeah.
the big plan out. What would you say to a beginner who's at that point?
That's a great scenario, and probably relatable to a lot of people who are listening, right? The concept of, a system works great, but then when it doesn't, you start second guessing, you start going back to the drawing board, and sometimes even just outright giving up on a strategy, saying, "Oh, this doesn't work." Well, I think that the answer is deeper in the drawdown. I'm in the back testing, where you've done the research in depth enough. When you've done a good enough back test, you should have rough extreme parameters that you should be expecting. So, like, for example, if you do your back testing and you take 1,000 hypothetical trades, and at the worst case you have a drawdown of 30%. If you're at 20%, this is not out of the realm of possibility for your strategy that you should have already accepted before going into this. However, if you're at 45%, yeah, something might be different. Something might have broken. Maybe you broke rules, maybe you didn't, and maybe just the markets changed. But by spreading out your back testing through many different market cycles, different environments, like, for example, if you were long only on the S&P, from 2016 to 2019, it was hard to mess that up. But then 2020 and 2022 would have been a real challenge. So if you'd only back tested certain environments, you might have missed out on what's expected. You have to know, I call it stress testing, where you stress test the worst case scenarios for your strategy, and then be prepared for those to potentially happen, because nobody knows what the market's going to do 100%. So you have to stress test. So you have to know the extremities of where things could go and be prepared for them, so that, when you start having those self-doubt questions, you say, hey, in my back testing, this is what I found. This is what is expected to potentially happen. And if it's within that parameter, within that realm, don't freak out. Don't just switch systems, because every system is going to have tough times. Question is it really breaking the parameters that you had planned for? That would be the case where you start, I would say, reevaluating your system.
Okay, cool. So how would somebody sort of, I guess, kind of pick between have I broken the rules or have I stuck to the plan, but it just hasn't worked out for that trade? What could they do to understand that?
Yeah, I guess one of the biggest ways would be to closely review the trades that you've taken, whether that be, you journaling and you go back and say, like, hey,
Right.
Did I actually truly stick to the rules on this trade? Did I truly stick to the rules on this? As long as you have predefined rules that you should be sticking to, or if you have a trading friend, you could go over it with a friend. I always vouch for that, because I personally have someone that a trading partner here at my company. We've traded together for years, and having that collaborative experience could be very cool, because you can take a trade example that you've taken and say, here's why I took it. And sometimes an outside person will see something you're missing. And that can be really powerful. So, yeah.
Yeah, that's a really good point, actually. Trading buddies. Yeah, I like that.
Yeah.
I like that. I used to have my dad, to be fair.
Yeah.
We started
And
trading together.
Yeah, it's a powerful thing to have somebody to talk through it with is huge.
Yeah, absolutely, absolutely. Where could people do that if they don't have a trading buddy? Do you have a forum on your website, maybe, or is there anything that they can do to with you?
Yeah, I do. I have a we have a Discord channel that is
Okay.
somewhere people can connect with people if that's something they're interested in. Which you can just find it on our website, a1trading.com.
Okay, awesome. So when you started to turn around and you kind of developed your strategies and went there and you started to get profitable, how did you handle that transition?
Yeah, so becoming profitable, like a lot of times, at least in my interpretation of what it meant before I actually was able to get there, was being profitable means suddenly one day you wake up and you're just like this wizard that knows what the market's going to do next, and you're going to be making, massive returns on the market. It was so different than that. It was sort of just a gradual process where it was just, okay, losing less, eventually break even, and then slight profits. And then it kind of stayed slight profits. It hasn't gone much further than slight profits. That's where a lot of times the impression of what a profitable trader differs from the reality. Profitable traders, at least all the ones that I know and I've worked with and spoke with, it's not big returns suddenly. It's very slight profits over the long term on a large capital basis, and contributing to that account, whether that be, from other sources of income or just compounding gains, prop firms. There's so many different options out there. But again, the difference is people think when they become profitable that it's going to be this big jump into like big money, turning smaller amounts into bigger amounts. That's such a false, idea from everyone that I know who's profitable. Not a single person vouches for trying to make 100% returns a year or anything like that. Nowhere even close, right? So that distinction, that difference between what is thought by new traders and what is found by professionals is very different. And I think the sooner people remove that unrealistic expectation, and realize that profitable traders, they don't win all the time. They win slightly more than they lose, and they just do it for a very long time and compound it. That's where the magic is compound interest, growing stuff over time, not sudden jumps in equity.
Okay, so for a new trader, then you'd probably say don't dive in 100% straight away. Maybe go in
No.
a little bit of time. Maybe use it like a savings account. Would that be fair to say?
Right. Yeah. No, and that's, I love that. I love that way of thinking about it. Think of it as like an advanced savings account. Don't go all in. And yes, like you just said, instead of assuming that you're just going to suddenly wake up and be there, I think maybe just going the gradual route, like learning to lose less each year, and then eventually learning to be break even and getting to that point where like, hey, I'm not losing money and I'm still in this game. You've made it past way more than most people will go. And then, eventually, if you start seeing slight profits, don't be disappointed or discouraged. Understand the power of time and compounding, and don't push the envelope, because a lot of times people get there and then they're like unhappy with how, you know, slow the return is, that they try and push forward, and that's where they blow everything up. So you can go back from actually being profitable into being unprofitable if you're impatient or undisciplined. So you have to be very careful and just sort of accept, at least in my experience, what got me there was accepting slight profitability over long term. That's profitability still. That's where I think a lot of people miss it.
Yeah, I think a lot of people get disappointed, especially if they start out with small capital accounts.
Yes.
They probably see that they're probably seeing it as like a profit gain, maybe just like what you'd pay for a sandwich at lunch or something. So
Yeah.
they're probably looking at that going, well, this isn't going to change my life.
Right. And that's
Where
the
do I
thing
go from
is,
here?
oh, and that's the thing is, at the end of the day, the markets, they're not charity work. They're not, it's not fun thing to hear, but the reality is small capital doesn't just magically get to make a lot of money. And, sometimes I get those questions. People say like, well, then what am I doing this for if I can't even make any money? Well, there are prop firms out there that sometimes can help fill that gap of not having capital. But also, it's just the reality of the world. Unfortunately, it's like if you start a business and you have no capital and no experience, you're not just going to wake up one day and have a ton of money. You're going to either have to have a lot of capital or have a lot of experience, which costs time and energy and money to earn that experience. So nothing in this world is free. Nothing in trading is free. If you're gonna make lots of money out of trading, I believe that's totally possible. It's just going to take time, dedication, energy, and all that sort of good stuff.
Cool. So if somebody was going to start sort of today, then where would you kind of point them in the direction of? What would you say to it? What would you, in your journey, would you have done anything sort of different to get you to there, I don't know, faster maybe, or would
Yeah.
you happy with your journey?
No, I would say if you're starting out, everyone says it, but nobody listens to it. Everyone says that you should stick to a demo account longer. I'm a big proponent of don't spend your hard-earned money on the markets because, if you go into this and you truly understand that, okay, for many people, for most people, like look at the stats. Most people lose money at this. You're not the exception, most likely. Almost certainly you're not the exception. And in order to get profitable, it's usually going to take several years of hard studying. It's the people that I know who are profitable, that have made it, quote unquote, they have a real passion for markets. If you're new to this stuff and you are genuinely interested and can see yourself developing a passion, then read articles, connect with people, join a Discord group, start having conversations, listen to podcasts like this. This is excellent. These sorts of things helped me tremendously. But at the end of the day, you need to be passionate. You need to be interested. I've never met a trader that was profitable that didn't absolutely love the markets. And so I would say, build your passion for trading. See if this is something you're really seriously interested in investing your time and money and interest into. And then if you're there, you have a real good foundation to start learning more every day from all the great resources, many of them free out in the world that you can learn from. So I would just say there's no shortcuts, but listen to people who have more experience, who clearly, have been through some of the ups and downs, and don't brush them off. Don't think you're the exception. The stuff is not easy. And like I said, every profitable trader that I know is like lifelong dedicated and super, super into it. So yeah, that's what I would say. Just look at it objectively.
Cool. I mean, that's kind of like the opposite of what most trading gurus out there say, isn't it? With the rocket, with the Lamborghinis and whatnot, is that it's quick money. It's really not, is it?
Well, they say it's quick money because it makes for an easier sale when you're trying to sell somebody something, and you can paint a picture where their life is going to change. And I'm not a big fan of that. I think that does a disservice to the genuinely passionate traders that are out there. We know that's just laughable to say that this stuff is easy, but I think that the real people will recognize the real people, and oftentimes many new traders, unfortunately, they see those people first, and then they come to find traders like yourself and myself, who are seasoned a little bit more. They've experienced some of the ups and downs, and they're not just showing cars. So yeah.
Yeah, I love that. I'll try to go back a little bit to your back testing, because I think that's a really great point for beginners. And I'd just like to ask, what would you start out with if you were gonna? So say I've got my notepad here. This is my day one of trading. I'm gonna back test something, but I have no idea what to start with.
Yeah.
What would you say to those people?
Yeah. So I think that I had a very, very similar question. I mentioned this. This is just fresh on my mind. This past weekend, we did a seminar here in Atlanta, and it was really fun. And someone asked me the exact similar question. They said, you talked about back testing, but how does someone get started in that? And I really think that the answer I would give is start with your ideas. Start with, you're looking at the euro against the dollar, and it's trading up for 3 weeks straight. And ask yourselves, is it likely to keep going, or is it likely to turn around? Well, I don't know. I don't have that answer for you in front of you. So test that. So come up with a parameter. Let's say if the RSI is above 90 on the euro dollar, and I put a stop here and a target here, and I run that 1,000 times, how does that tend to perform? So that's where I would say you start asking questions about the market. And then when you have them, go ask it via back testing. And what you'll find is that you end up going down rabbit holes of long periods of time of testing. And that's where the reality is. I think you just need to spend many, many hours back testing if you're going to really be able to answer those questions thoroughly. Because, if I took an afternoon and I said, specifically to the euro, if euro pairs rally for 3 weeks straight, they reach a 90 plus RSI, and I took a short, maybe it comes out to a certain percentage of the time it tends to do this. And now that's something I can put on my bookshelf and say, that's something I've studied. And maybe I can continue and go forward and potentially even building systems around that if it's something that has promising results. So I would say start with your questions, ask them, and then ask them to the market through back testing.
Okay, cool. Now I know you're quite into your fundamentals and things like that. Did you say that also gave you a bit of an extra edge in your sort of trading system? And would you argue the fact that, so a new trader, would you say backtest first, go learn fundamentals second, or would you swap that?
So I think that fundamentals are the more difficult of the two, I would say, compared to technicals. Charts are reasonably easy to test, to look at, to understand a support zone or a trend line or something like that is relatively easier, in my opinion. Trying to understand the full picture of the markets when there's billions of variables involved can be very, very tricky. So it's a bit daunting at first, but I think that understanding how an interest rate hike might impact the US dollar, if it's the Federal Reserve or if the Bank of Canada does something, how is that going to impact the Canadian dollar? I find that to be very, very valuable because in some cases, there's a little bit of you start to pick up on the story of the market. It is more discretionary than just a hard technical mechanical strategy. Yeah. But understanding you can paint a picture of what the Federal Reserve may be likely to do in the upcoming meetings, et cetera, can be very powerful for maybe avoiding bad trades or for adding confluence to your technical strategies, that sort of thing. So for me, fundamentals have been incredibly helpful for understanding trades that I'm taking, trades I'm interested in, et cetera. But yeah, they're a bit daunting. I would say that is something that newer traders should definitely begin to listen into podcasts and understand. Okay. But I would say go to that a little bit later once you understand just the simplicities of technical charts and familiarizing with yourself with your favorite currency pairs, the way they move, etc. Yeah.
Okay, cool. Well, I think that's been really good, really helpful information. I think a lot of new traders will take a lot of this in and really benefit from that. Do you have anything else to say if you're a new trader? Would you say anything else to someone who's starting out on their journey to trade?
Yeah, I would just say that, like I mentioned it earlier, I'll just reiterate the point that if you're really interested in this stuff, develop your passion instead of focusing on trying to turn this into a side hustle. I don't think that trading is a great side hustle. I mean, it is in the sense that it's a source of income, but if you treat it with the mindset of oh, it's just something I'll pick up on the side, it needs more effort than that. It is very demanding in terms of learning this stuff. It's like getting a 4-year degree in accounting or anything else. It's a lot of work. If you're really interested though, and you take on that level of approach, that level of seriousness with it, it can be an amazing thing. It's a really, really cool way to learn to manage your own money, to invest your own money, to trade it. And again, as we mentioned earlier, treat it in some ways like a advanced savings account. So yeah, I would say just develop your passion, get really into this stuff if you are serious about it.
Okay, thanks for joining me today, Nick. That was really great information. Can you let our subscribers know where they can find anything about you?
Sure. So my company is a1trading.com. We build software tools for traders. And then, of course, my YouTube channel is Trader Nick on most social medias. That's also my handle. You can just search up Trader Nick or Trader Nick FX, one of the two.
Okay, brilliant. Thanks, Nick.
Awesome. Thanks, Jonathan.
Hope you really enjoyed the video, traders. I thought there was lots of good insight there from Nick in this one. Hopefully we get to chat to Nick very, very soon again. And if you have any comments or questions or anything like that, please drop them in the comment section down below. Leave this video a thumbs up and subscribe to the YouTube channel to see some more content just like this. Thank you.